I would like now to introduce your speaker for today, Vicki Mulak. Vicki is an enrolled agent and certified financial planner, that is CFP, and owner of American Financial and Tax, a tax preparation, planning, and representation firm, which was founded in Tustin, California in 1985, when Vicki became both a resident and a business owner. Vicki is a well-known presenter on federal and California tax law with audiences at continuing education events hosted by various practitioner organizations. She is also an author of numerous articles that have appeared in various practitioner journals. In addition to her practice, Vicki served on 2 of the 3 California State Tax Agency Advisory Boards, the California Tax Board Advisory Board from 2010 to 2017, and the Employment Development Department's Small Business Employers Advisory Committee since 1997. She has been honored with numerous awards for distinguished service in legislative advocacy and educational goals from the Enrolled Agent Associations, that is NAEA and CSEA. She resides with her husband George in Tustin. We welcome our expert speaker, Vicki Mulak. We are now ready to begin.
Thank you, Gary. And I welcome all the attendees today. Good morning to some, good afternoon to the others. And we have a 2-hour session today on basis and assets. When you first start in the taxation industry, I think you wonder what is basis, and then the more immersed in taxation you become, you realize that basis permeates almost every area of taxation. And it determines the value that assets will have for taxation purposes. It'll affect depreciation deductions. It will impact disposition gains and losses. So we're going to look at basis in from a lot of different perspectives or angles today. And so we're just going to start right into the presentation. Basis represents for tax purposes your investment in property, as I said, used for various purposes in tax. And basis is calculated, and assets take their basis from 3 broad categories. Probably the most common is its cost, and we call that cost basis. If there's been any adjustment to basis, we call that adjusted basis. And the most common encounter with adjusted basis is assets subject to a depreciation allowance. So as we are recovering costs through depreciation, we call that the adjusted basis, which might be cost basis less accumulated depreciation deductions taken. And then we have basis other than cost, and this might crop up in inherited assets. It'll also crop up whenever there's been a deferred recognition of gain. A basis will be reduced by non-recognized gain. So that's kind of where we're heading today.